Right, everybody. So Goldman Sachs and Netflix today have released their earnings announcements. And as you can see on my screen, first of all, for Goldman Sachs, we are left more or less with an outside day engulfing candlestick. This is a very bearish signal, which is just setting up as at Tuesday for Goldman Sachs. Again, just to repeat myself, we have an engulfing candlestick at a known resistance area. That resistance area is coming in right around 240. Also, pay attention to volume. Now, this isn't the end of day volume, which I have on my screen at the moment. We still have about 2 hours of trading to go for the Tuesday's day's worth of trading. But again, it is relatively elevated, so to speak, with a couple of hours left still to trade for Goldman Sachs. So it looks as though we are going to see a little bit of weakness flow into Goldman Sachs. We'll have to monitor this. What I wouldn't be doing at the moment is placing an entry below the wick or below the intraday low, which we've registered already during today's trading session, looking for a trade on Wednesday. Allow this another couple of days. At the end of the day, so to speak, this Goldman Sachs trade, although it is showing potential weakness, it is still counter trend to the prevailing trend underlying, of course, the Dow, the S&P, and the Nasdaq. We are still pushing up into new all-time highs. For instance, today, the Dow Jones Industrial Average, if you pay attention to the top of my screen over here, we peaked at 23,000 or just above it. So we are starting to see, again, a little bit of an upper wick develop on the industrial average, but it is still counter trend to what appears to be occurring or taking place right now on Goldman Sachs, which is looking for a little bit of weakness moving forward. Also, if I bring up the chart of Netflix, you can see today also with a couple of hours left during the trading session, you can see that of a high wave spinning top. It is also taking the formation very close to or similar to that of a shooting star candlestick as well. If we start combining this with Monday's candle, we have a hangman also at resistance. So we're starting to see potentially some early reversal candlesticks show up right around also this known psychological round number here, coming in at about $200 per share on Netflix. At the moment, we're trading at $199.13, but we'll have to monitor this candlestick and see how the day closes on Tuesday. But this is a relatively bearish signal. We have a very large upper wick, and this is also in combination dating back to Friday last week, where we started to establish the first real doji candlestick, and then again on Monday, that hangman at resistance. So we're starting to see some interesting sort of reversals or potential reversals begin to occur on some of our top 12 individual trade lists post earnings. Also, another trade that I want to speak about is Caterpillar very briefly. Now, this is something that you should be out of. You should be out of this for a pretty handsome profit. I spoke about this over the weekend. This is Friday's candlestick. We gapped up, and I was suggesting that, look, if you came into the week on Caterpillar and we gapped up marginally, if we even traded positive, you should begin rolling out of those core contracts. The reason for that is because we do have an earnings date scheduled for Tuesday week. Now, it's up to you when you choose to leg out of this. This has been tremendously profitable for a lot of people. Congratulations on placing these trades. But look, I wouldn't be holding on to this really any longer than what I need to. We've pretty much juiced out all of the profit that we've been able to sort of achieve riding this trend higher. And if you're just trying to hold on to this for maybe even 1, 2, 3 more days, I'd sort of encourage you to actually ponder why it is you're choosing to do so, and not just to liquidate this immediately and put that profit in your back pocket ASAP. It's very important that you do this because, again, between now and Tuesday next week, I don't see Caterpillar really eclipsing the highs of what we established on Monday. And this is the perfect opportunity, again, to start rolling out of Caterpillar, to completely roll out of those existing core contracts that we've been in over the past number of months on Caterpillar. Tremendously profitable trade. Now, taking into consideration, of course, what's going on with Netflix, also what is just sort of transpiring now on Goldman Sachs, also with Caterpillar, the markets themselves, if I go to the weekly chart, the Dow is up just over 100 points, so to speak, when we're almost through Tuesday's day's worth of trading, so almost the first 2 trading sessions of this particular week. The S&P 500, it is still marginally closing up. This is the weekly chart. We are up 3 points, but again, a rather sort of immaterial move. When we just consider, of course, that we've got 2 consecutive spinning top candlesticks, and the Nasdaq is still trying to gap to the upside, except there still isn't much follow through. Although we are still marginally positive, we are up 16.2 points, so to speak. We do have another doji candlestick under construction. This is also imitating that of the high wave spinning top, which we registered last week as well. So I do have upper targets, so to speak, on the Nasdaq. My sort of Fibonacci sort of expansionary level, also when we tie in levels of confluence, came in at about 6,648. Also, as I've already alluded to earlier in this particular video, we touched snatched or snagged 23,000 on the Dow Jones Industrial Average. Another very important psychological round number that the Dow is just trying to sort of, at least for the first time, test. And we're obviously going to see some form of a slowdown around this area. So in my own personal opinion at this point, although the trend is still healthy, although the trend is still favorably bullish, with these elevated ADX levels, as I can bring up on my screen up here, you can see I've got a 68 reading on the S&P 500. If I bring it up on the Dow Jones, I also have a 68.28 rating. If I bring it up on the NASDAQ, you can see it's registering at 51. If you go back historically and ask yourself, well, generally, how far do these trends, move until they need to slow down? We're more or less hitting right into these areas. As, of course, we're running into those psychological round numbers. The Dow, 23,000, congratulations. But also with my more sort of laser-focused area or target coming in here very close to 6,648. So we're starting to see the market sort of align very nicely into what we've been speaking about. We've made some good trade executions over the past number of months, and I'm very proud and humble of that. But at the same time, you need to be thinking about legging out of those existing positions, more or less rolling out of some of that market exposure, if not all of it, and allowing this market to move through the natural ebbs and flows of the slowdown, which I assume is going to begin more or less where we're currently trading at very, very soon. So I hope that makes a bit of sense to you as at this Tuesday. If you have any questions or concerns, please email me, success@pivotpoint-trading.com. Until next time, everyone. This is James on behalf of Pivot Point Trading. All the best. Farewell.